All right, fam. Eating a peanut butter sandwich right now. Um, so what we're going to talk about today is um, the basics of support and resistance. There's many kinds. There's trend lines. There's horizontals, which we'll talk about today or in this video. There's VWAP. There's moving averages. Fib levels. Yeah. But the most basic are hot zones on the high time frame. So let's go to a clean chart. I don't know, let's try. ENA. Just because it's nice and neat. Okay. Move all this shit. So we'll go to the daily. Support and resistance, what is it? When price rejects or bounces off of it, it tells us that it is a reaction zone at that price level. Either it was overbought or oversold, and then you see reversal. So the best way to identify that is to see on the highest time frame you can, or I'd say start on the daily. You can go weekly, but you'll miss a lot of, like, you want a bit of noise. So we see a low here, and I like to use boxes. They're more zones than like areas, or their area is a zone, but you can see that this is one. I just like to use regular boxes like this. Another one we can identify is probably this one here. So this one probably can extend a little higher to like right there. That's a zone here that it'll bounce in maybe a little above, but you know around this price area you'll get a reaction. And that's what we're looking for. We're looking for a reaction to then make a decision. Like, was the reaction to reject? Sell. Was the reaction to blow past it and then do one of these guys? That's flipped as support. Then you buy here, right? So that's what it'll help you identify. So we've identified one there. And this is a little messy, but let's try and find another one here. That's another zone. Could argue be up to here too, if you want, and this being a little deviation. But you've identified zones where once price reaches, it's going to do something, right? Horizontals have more weight than trend lines. Trends tell you the time, when to look at things, and horizontals give you levels to look for, as in, like, you can do all this shit in here, but then once you break above, that means you gained a level. You should ask yourself, did we gain a level from this move or lose a level? And that'll tell you what's happening. Losing a level means downtrend. Gaining a level, you're starting an uptrend. You can track that like this. Boom. And you can see this would have been a really good buy because you have 2 points of confluence without even looking at the indicators. Let's get that out of there for now. Why is this a good one? Price broke out of it, above it, and we know that that was previous resistance because price bounced a bit here, reacted, just did some whatever it wanted to do, which was this, then came back up to try and break above it but failed. And what does that mean? There's lots of sell pressure in this area, and once there's a lot of sell pressure, that identifies that area as a area, a zone of significance. That price is significant because people didn't think it was worth it that time. Or they thought that it was, you know, a little too much, like they were taking profits, whatever you want to call it. Okay? And here, you can see once we broke above, let's check the volume. Very convincing. Volume came in for this move, this whole block here. Once it broke above, did we gain a level? Yes. So now it looks like we're trying to do an uptrend. We're trying to start an uptrend. And then we've identified this previously as resistance. What did price do when it got close to the proximity? Might even look. That candle was there, that wick, and it's touched this. And what did happen when it got there? It rejected. Confirmed this as support. That's called a retest. And why is that retest really... Why would I have taken that area, that zone, as a buy area or a heavy DCA? Because it lines up with a trend line and a horizontal. 2 points of confluence, like I was saying. So you can confidently bid here, or DCA heavier. And what would be your risk? And when do you know your risk is... when do you know you even have risk? You always have risk. But you can mitigate how much risk you have by buying on hot zones and crucial supports. So, where's the fucking ruler? So your downside would be either your invalidation would be break of the trend line, a close below this trend line and below this horizontal level, because that means you're losing that level. It might even wick down and then go back in. That's a deviation. That shit happens all the time. Have a stop loss if you're trading. If you're not trading and you're investing, just chill. Don't go heavier then, right? But if you were trading and you bought on this area, your stop would have been 8%. On low leverage, that's not that bad. That's actually really good. On the daily time frame too, that's huge, because 8%, let's get that again. 8% and your upside, if you were to sell at the current price or not even at the height of where this high was, let's say you did, selling the top and got fucking lucky. That's 47% versus a risk of 45. If you bought willy-nilly up here because you think it's going to break out, that's poor risk management, because your downside is 30%. Right? So it helps you identify good risk by having support, resistance, and confluence with other things like the indicators, especially trend lines, super powerful. Yeah, there's really nothing much to that concept, but it has some interpretations. Consider them zones, not exact. Like, it won't bounce exact. You don't have to you don't have to zoom in with a microscope to see these levels. But you can even dial it in more and go like 4 hour, and you can only get that with the paid version of TradingView. Anything below the day, you can snipe even more of an entry by looking at what it wants to do on the lower time frames. Right? So you can see 1 bounce, 2 bounce. I'd say that's a pretty good retest once we get above this wick. That's successful because we're trying to push a higher high. And again, like I said, your risk is 8 or 9% from there, depending on when you catch the candle. But you can have confidence, low leverage or DCA or whatever you want. You can have confidence that you're buying at a good level, and your invalidation is very strong in a sense that it makes sense. If it goes lower than this, you're losing momentum on the trend line, and the question we asked, have you gained a level or lost a level? This is our hot zone that we've identified. You could even go down to here 14 if you get really cheeky and like use this as your entry, or even this one, and then use this as your stop or this as your stop. That's an 8%, and that's even an even better sniped entry. But you get that's my point of being able to zoom in. You can get a little more accurate and have less risk because you're identifying things much. You're seeing things a lot clearer under the hood. On the daily, it would have been hard to see that. You can't see exactly where, right? That's somewhere in here, and like you wouldn't have seen that 3 bounces there. Let's try a different one. But you see the power of pairing them together, right? Trend lines and horizontal supports. And the more touches, especially on the daily time frame, the more powerful. And another strategy to use as a what you can do, and I'll talk about this later in a tie-in video with all the things together, like all the different types of resistances and support tools incorporated with indicators. You'll see how powerful it is to identify these zones on the daily and then swing trade on the 4 hour or 1 hour. You know that these zones are hot. They're like very reactive. Just like this. This is all noise. Like I see a lot of people zooming in to the 4 hour charts and like, oh fuck, we're bearish, we're dipping. Oh no, bullish. Oh no, dipping. That's too much noise. We're not close to a high time frame reaction zone. So none of this noise matters. It's just noise, right? But what the low time frames are meant for to do is give you this to be able to sell into that using high leverage as a trader, right? This move to the top, to the next zone, the resistance is 32%, but with leverage you can make that 32% a lot more. But with leverage you can also make that a lot, you can lose money just as fast. But my point being is that when you zoom in, those hot zones, if the price is on it, it's very, very good to be able to take that trade to your next identified hot zone on the daily. And if it does something like this, if you're trying to trade the 4 hours, so like I said at the start of the video, we're identifying them on the daily, and then depending on what you want to do, trade the daily, trade the 4 hour, you've identified these areas. So you can even go down to the 4 hour, the 1 hour, and trade those time frames. But what I want to show you is if you're trading the 4 hour and then price does something like this, you take out takes out some profit, and like with advanced strategies you can keep everything in and then add to your position. But what this is, what I'm trying to illustrate here is we gained a level. We didn't reject and come back in like in a channel, or we didn't do that, right? So what you can do is add to your position to make your entry here, or add your stop loss there and then see if it keeps going, and then see how it went. Touch here, we didn't get stopped out, and our average entry, we've increased our position size. And then what happened again? Another bounce. Move stop loss up here and just keep growing that position. That's compounding. But that's the power of identifying hot zones, because you know you will react in those areas. Don't look at the 1 hour and be like, oh fuck, we're bearish, Bitcoin to zero, ENA to zero. No, don't be that person. Like, you can even see here, look, it bounced nicely off that, and I was just lucky that I ended up drawing it there, but that represented this area as a reaction zone. All right? So yeah, the takeaway from this video is identify reaction zones on the daily if you want to trade, and then zoom in. Don't identify them on the 4 hour and then zoom in, or like, and then do it there, because there's too much noise. always mark your macro, and then with your oscillators, once price gets to these levels, if it makes sense, then you take that trade. For investors, the same idea applies. It's like, if you're in a shit coin that you don't want to hold anymore and you see it did go up, and then you see your favorite token at a good buy level, you're going to wait till it gets to the resistance on the daily or the weekly or whatever. Then you're going to sell that shit coin and then wait if you want to. Like if it's not at a good price, the one that you want, wait till it gets to the price using alerts. Or if it's already there, then add to it. You know, you've identified a good sell point as an investor, a long-term buyer, that we can sell here and then put it somewhere else that makes more sense or is more bullish. It's called rotating your capital. You don't have to be a trader to do that. A smart investor will cut their losses off a shit one that, you know, they don't have conviction in, and then put it into something that's just here, and then ride that up and hold it long term. It's as easy as that. Right? So this could even be here. Why? Bounce, 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 bounce. That's a better zone. But what these do is to tell you to pay attention inside and zoom in if you want to trade it, or to sell it if you're in a shitcoin as an investor. I think that's it for this one. There's not much more to talk about. We've done, I don't even know how many examples we did. Just one, I think. Well, we'll do another one. Fuck, my mouse is dying. What should we do? We'll go Solana. So the daily is really interesting here. We might even start off on the weekly because that's a little obvious, and then fine tune it. You can do that with like one that has a lot of noise on the daily. Go on the weekly. Makes it a lot cleaner. Makes it a little more obvious. You can see that this area is a high reaction zone. We have a lot of candles reacting on it. Bounce, 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 yada, yada, yada. Rejected, rejected, rejected. On the way up, bounce, bounce, close to the zone, bounce. Easy peasy. We'll do another one around up here. Reaction zone. Once price gets in there, pay attention. Easy peasy. What is this one? This one's alright. It's not that great, but then you look on the daily and it makes a lot more sense. You can fine tune it to this here. That being a fake out. That makes more sense. More touches there. Precise touch, touch, touch. You can see it rejected so cleanly off that line. That's a channel that you can trade too if you're into that. But then let's zoom in. Let's see if we could have caught these moves. We'll go to the 4 hour. We see that the price wanted to go up here. Boom. Draw your trend line. And what did we get? A breakout of trend. I'm starting to pay attention. We made a, looks like another trend here. But that's called a retest. That's a bull flag. This, that. On a sloping downwards flag like this, that's extremely bullish because you get these moves. So that was a successful retest off this reaction zone. Did we gain a level? Because we lost a level here. Yes, we did. We gained one, made a higher high, and it's going. And what do we get from identifying previously, looking left? We identified a resistance zone. Once it got there, rejected. And then what do we have now? You can even mark that trend like this. Remember what I said. Once you lose the trend, even though it made another higher high, what does our oscillator tell us? Divergence. That's what it tells us. Actually, no, that's not divergence. That's normal price action. And that's, you're pretty, like, you can get away, you can only do so much with the two basic indicators. And like, you maybe wouldn't have caught this here. Like, that would have looked bullish. Actually, no, if you extend the trend line, it's still under the trend. So yeah, it doesn't matter because that's acting as resistance as well. The underside of a trend can also act as resistance. That's really important. I should have said that earlier too. So if we correctly do that trend here, one, it's following, it has momentum, higher high. You can even see at this point once it started consolidating, move this shit out of the way. It's losing strength. You can see it's losing strength, going down below the median. Then it's trying again, but it didn't break above that trend. Right? So that's what zooming in gives you. And then there's another one right here, another trend, which was a failed move, but on a higher time frame, if you look at the 8-hour or even the 12-hour, that's this trend here. That's a successful retest of this zone being solid support, because how many times did it bounce on it? 1, 2, 3, 4. You could confidently either add to your position or open it on the second touch, being like, okay, I waited for this one, or I missed it, or whatever happened to you. You know, if you took it or got stopped out in profits, because remember what I said on the trend, on trends like this, so even made a higher high, but that's divergence. Higher high on this point, lower high on the strength on this point, but the price went higher, but it's also hitting the resistance of the trend line. So that's another thing that a lot of people don't realize. They only look at resistance from horizontals. Underside of a trend is also resistance. And then what happened here? Boom. You know, if you were patient enough, looking at the higher time frames, saying that it could go down, where could we get a good? And when I'm trading, I'm scanning the different time frames all the time. But if I intended to take it on the 4-hour, that's my exit signal and my buy signal. I don't buy, like, that's something that you'll have to learn on your own. Like, that is a skill that's a dynamic skill. It's interpreting and translating what the market is telling you. I get it wrong sometimes, and that's why I have risk management. But you should stick to the time frame you intended to trade, because the data and the risk of oscillators, or like the indication of oscillators, tell you two different things. The high time frame could be at the bottom or at the top, and the 4-hour could be at the bottom, thinking, oh, we're gonna moon. But the high time frame wants to go down, like here. Or for example, what's a good example? You know what? I'll save that for another video, because that's time frames, not support and resistance. But my point being, before I went off on a tangent, is that if your stop loss was this low, so let's mark this. you got in at this candle because that's the breakout candle. That's the breakout candle. Your risk would be 10% on low leverage if you're taking leverage or spot buying DCA heavy. And then you would have gotten stopped out here because you were in profit 1%. Because it went up to actually no. Yeah, that you would have gotten stopped out there. But your stop loss was under the low of, maybe that would even be better than this one. That's how I trade. I like to look at the leftmost before. If this was the breakout candle, a lot of people use this as their stop loss, which is so fucking obvious. That one would have been better. And look at this candle. What the fuck am I doing? Look at this candle here. It didn't go lower than that one there. If you've got like extremely low leverage, like, or if you're just trading spot, you could even use this wick. Right? Because this one almost filled that whole one. But if you're trading, like, don't make it obvious, because that's how you get that's how you get gamed by market makers. Yeah, hot zones, man. Hot shit. It's like, this is range trading. I was talking about range trading in the support resistance thing, but it still kind of applies because you can see the moves to be made, right? And in confluence with strong indicators and understanding them well, you could have caught this one too, despite it being out of the range, being a deviation. Strength was really low, but then you see that sharp spike up. And you can even see it in the price there. And let's check the volume there. Yeah, volume backed that, meaning that was a high participation sell move. But then the buy up was also a pretty strong one that brought us back into the range. And you can see that by the oscillator at the bottom, that it did cross above the 20. And we got our signal that strength is coming back in above the median. So there's so many different ways to use support and resistance in confluence with other things, especially once you start incorporating with other support and resistance tools. It's such a game changer. Like, it's so basic, but I'd say 100% of systems are built around horizontal support and resistances, which some people call price action. You know, call it what it is. Call a spade a spade. It's still the same shit. Same with this move here. It didn't exit the range. Higher high, higher high, higher high, or higher low. And it just keeps going. Momentum tracked up to this point. And then it shot up. And like what I said about my example, if you only intended to trade the range, you take like 80% profits or whatever percent, leave some in that you can grow. Or you can just move your stop loss because your entrance was, let's say, be realistic, it would have been right here. Why? Oscillator crossing up here. We're bouncing off a support, a trend line. And strength, where was it? Oh yeah, strength was, it's like trying to break out, but it did make a higher low. You can also put trend lines on strength. And that whole move up to here still respected the trend line, despite the strength going lower. And that gives you a signal to be like, I gotta pay attention, because if it goes lower than this and closes, that's a sign for me to, you know, to bail or like cut my position. And what you can do, like, I'm gonna show you, keep showing you the power of fucking compounding, man. It's crazy. I got my mouth full. Sorry. Where was our entrance? Yeah, right here. Your stop would have been below this point. Why am I using that tool? Would have been below this point, and even at this point, you wouldn't have got stopped out, and it just keeps going, right? So then you move it here. You can add to your position or move your stop loss, whatever you want. And then up here, because you're so far from your original entry, you can keep adding or, like I said, move stop loss, whatever. But if you get stopped out, you're in profits, right? And then when you get these kinds of moves, those are the ones that sometimes you can hold for like a 100x during the bull market. Just keep adding to it, adding to it. Yeah, so we gained a level, and what we want to expect is this. Confirmation, boom. And then what do? Move that here and just keep moving it up. On the next support, yada yada. Okay? So, that is horizontal resistance. Ta-da!